Okay, good morning and welcome everybody, guys. Welcome to this special edition Pounds for Breakfast combined with London Session Open, combined with the interest rates announcements as of last night. Guys, my name is Dane Forex and it is an absolute pleasure to be with you here this morning. Now, traditionally, we would have our timeline, but we are doing away with that timeline this morning, right? Because we have a very special edition show that we're essentially breaking down what has Powell just done, right? I mentioned yesterday, this could set the tone for the week, could set the tone for the next quarter, and we're starting to see some really big moves in the market. If you guys were live with me yesterday evening, I was looking at US30 longs, I was looking at XAUUSD longs. I caught US30 or Dow Jones around about 5,000 pips. So if you caught some of those trades with me, I do see a lot of our traders caught those trades, an absolute well done. However, that was not the trajectory overall. That's not where the market was heading to, and we're seeing a very different picture from the past two interest rates. If that picture was exactly the same, we would essentially treat it as we've treated it before, but it is not the same. We're seeing something completely different. So just a shout out to Pitsy, welcome Ashwin, Trisha, Keegan, Petunia, Mark, Godwin, welcome Lizzo, Heavily Defended, Troy, Gawain, Tumelo, Mackenzie, Manlisi, and I think Keegan, I've mentioned you as well. Good morning on this beautiful Thursday morning. Now guys, we had a ton of fun in last night's live stream. If you enjoyed it, let us know, because these are the kinds of streams that I really most enjoy. A lot of the times we're looking at these markets and we're doing this, and I generally do them on my own. I go through the markets, I listen to the news, I take trades, and if this is something that you've enjoyed and something you would like to continue to see, we will continue to do more live broadcasts covering high impact economic and news events. So let me know in the comments down below if this is something that you guys enjoyed, and if you did, let me know, and I promise we will continue to bring the heat, make it better and better every single time. Now guys, I love the live broadcast purely because of this chat. You guys are absolutely amazing. Welcome Peter, welcome Tamika, Patrick, the daily money markets. What is happening? Good morning. All right, so we're about to get into it now. Before we dive into the interest rate announcements to curb inflation, we do have some headline news that is going to affect every single South African, as well as a big move in Europe. Now, I must also add to the fact that there is still the politics regarding Russia and Ukraine, and that's going to continue to play out. I think news outlets are essentially downplaying it just because of the amount of pressure in the markets right now, not to cause fear, not to cause panic, but Putin's statements are quite bold and are quite serious. As I stated last night, Elon Musk made a comment in this Twitter trial that he told one of his investment bankers this might not be a good time to buy Twitter, considering we could be entering World War III. And I say these words very carefully because I know that I don't like being pessimistic or, speaking about things that are extremely negative, that might not be true, but we do need to take that into consideration, both in the markets as well as in everyday life. All right, so let's jump into what we do know, and that is the economic calendar for today. So without further ado, let's jump in and let's have a look at what we could expect to see from markets today. Now, as I alluded to yesterday, every single South African could potentially be paying a little bit more for their home or their car if you have signed or have a loan, a bond, anything on a variable interest rate. And that is because, as we saw last night, we also again are going to get an interest rate decision for the South African Rand. The Reserve Bank is making a decision, and that's going to come out at 3 o'clock this afternoon. So that's going to work out perfectly for us, because we are going to be in a position where we're going to be live for the New York Stock Exchange Open. So I may go live a little bit earlier, and I'd love to cover that interest rate decision. If that is something you'd like to see, let me know in the comments as well. Manalisi, welcome. Zanilla, welcome. Jollifi, welcome all the way from Malawi. Beautiful guys. Let me know where in the world you are joining us from, please. That helps to know where every single one of our clients are coming from. Now guys, before I move any further, make sure you like and subscribe. Right, hit that bell notification, like and subscribe on the channel so that you never miss a new upload. We're uploading a ton of new content. This week we've brought the flames, next week we're bringing it to a whole new level. So that is something you definitely want to be a part of moving forward into the next week. All right, so let's jump into it and let's get started with what else we're looking at. Now, South African interest rates coming a little bit later. However, we do have the Bank of England interest rate decision, and that is also coming out today. Now, in both cases, right, we saw yesterday 75 basis point hike on the dollar. We're looking again at a 75 basis point hike. That is the forecast for the South African rand. Regardless, we got some CPI data yesterday for the South African rand that was better than expected. I did not expect to see good CPI data. We got good CPI data, and we're still likely to see a 75 basis point hike. However, Bank of England interest rate decision, they are looking at hiking around about 50 basis points, right? So bringing that base interest rate from 1.75% to 2.25%. Now, again, if there's a bigger than expected number there, that could be a shock factor, and that could obviously have a big ripple effect on the pound, which is currently already under quite a lot of pressure. So we're obviously going to pay quite a bit of attention to that. If you are a pound trader, please be aware, and obviously at 1 o'clock there's going to be quite a bit of volatility. Okay, so obviously you want to take that into account. Now, as we dive into, we're looking at the charts, and we'll look at the charts in a second. We obviously want to talk about what Powell has done and why are we seeing a bit of a different move in the markets than what I traditionally would have liked to have seen. Right, as I showed you guys yesterday in last night's broadcast, for those of you who have your Globex 360 live accounts, we sent you a link and you joined us a little bit earlier, right, where we did analysis, we looked at what could happen, and I explained that in the last two interest rates we saw this correlation where we got a weaker dollar, but we got a really strong market in terms of US30, in terms of indices, right, stock market, Wall Street. However, last night we saw initially that move, and that is what allowed me to essentially have a buyer bias. But in essence, we're seeing today the complete opposite effect. Now, we need to break down why is that, and that I believe largely comes to the fact that Powell indicated that they're sitting around the 3.6% unemployment rate, and in order to curb inflation, that employment rate needs to be closer to about 4.4%. And I believe the market has absorbed that. From a Wall Street perspective, is extremely negative, while the dollar's reacted positively on a very hawkish, strong approach to curb inflation. Now, if you consider that moving from 3.6% to 4.4% in that region, we're talking about millions and millions of Americans who essentially, the goal to curb inflation is to squash the economy, to slow it down, to allow the borrowing of money to become more expensive, and essentially tightening out that economy, right? So the markets may have reacted negatively due to that fact. At this point in time, we can only speculate. At the moment, there is big money moving the markets, and as I said yesterday, we've seen this pattern happen twice. Now, very interesting topic, and I'll show you guys this in the markets in a second. Whenever you look at market structure, and this is a tip for those of you doing price action for the longest of times, when you see a market structure that has one touch, two touches, the third touch is always generally manipulated, right? Because why? The first touch, nobody could guess. We maybe look at Fibonacci, we look at resistance, we look at support. Second touch, we can kind of estimate, but once we have two touches, we have a trend, right? We have a line, we have a structure within the market. That third touch is generally manipulated, all right? And what we could be seeing with this particular move today, or rather last night, is the fact that smart money, big money, Wall Street could see, what was the previous effect, the last two effects, and essentially the third move, we could be looking at a bear trap on US30 on indices. We could be looking at a bull trap on the FX markets, where we have the dollar as a base currency. And I'm going to dive into this, I'm going to look at this a little bit further, but we're going to see this play out over the coming week. And this, I believe, is going to set the tone for the coming quarter from a trading perspective. So if you haven't been paying attention, you really want to start to pay attention, because it is about to get serious. Okay, so first and foremost, we're going to, as always, I think we're going to start off with the dollar index, and we're just going to look at, what essentially happened last night, and just a quick recap of what has transpired here. Excuse me. Okay, so we're going to start off first and foremost dollar index, and really just recapping what happened last night. I'm currently sitting on an hourly time frame, but I think the best way to demonstrate this is we're going to look at it on a 15-minute. And what I'd like to point out here is the fact that at the point of the release, right, we already had a fairly strong dollar pushing, to the top side. Dollar was pushing top side. All the markets looked like, the dollar's going to gain in strength. However, based on past data, I was under the belief and I held the sentiment that the dollar should lose value. We immediately saw that move happen in the preceding, hour or two of trading, ultimately then having the dollar do a massive reversal and ultimately end out stronger than at its absolute peak of the interest rate announcement. Okay, so this is completely counterintuitive to what we've obviously seen in the past, as I've explained in past interest rate announcements. Here's the 27th of July, and we go back to the 15th of June, right? So completely counterintuitive. Yes, in some of these cases, we get a sharp pullback, but never an instance whereby we essentially, from a strength perspective, break resistance, meaning dollar gets stronger than after post interest rate announcement than pre. All right, so that is definitely something that we have not yet seen before, looking at these interest rate announcements. Again, if you have a look at where we're currently sitting, we've just basically popped into resistance from a dollar perspective. If we look at a long-term trend perspective, and I'll maybe put this on a 4-hour for you guys. Right, I'm just going to tighten up some of these levels. But from a trend perspective, we are sitting square into resistance. The dollar is doing extremely well. The dollar is sitting extremely strong in relation to what their economy is currently doing, right? If you said to average South Africans, in order to better the economy, we need to lay off, another 1 million, 2 million people, I don't think the Rand would react in a similar way. All right, and obviously the US economy, world reserve currency, 90% of global transactions happen in the dollar. There's a lot more factors to support a stronger dollar than a Rand type of comparison. Now let's quickly have a look at what has happened on US30 before we jump into currency, right? So giving US30 a quick peek. As we've discussed in the week leading up, US30 has been sitting in a fairly vulnerable position in terms of we have that breakout. And as I discussed last night, the interest rate announcement we got on the 15th of, let's see here. There we go. The interest rate announcement we got on the 15th was essentially the first 75 basis point hike, was essentially one of the catalysts that allowed US30 to break out of its long-term bear trend. All right, so that is the first thing. The second thing is that we also then had on the 27th the next basis point hike, which then further accelerated US30 to the top side. And this is pretty much the same pattern we've seen across indices across the board. Now we have to understand this is a bull impulse. We have a breakout and then we have a correction, and you can see it just based in how straight, how long it is, even though in this correction we have some serious downside moves followed with a little bit of correction, a pop up to the top side, and then another impulse towards the downside. But just looking at where we're currently sitting, and I'm going to leave it on a 4-hour, and I know there's a lot of detail on the screen, and for those of you that are watching on a mobile device, this can look a bit tricky, and I suppose for that reason let me maybe drop down to a daily time frame. The 88.2 is essentially the lowest level we would want to see from a retracement perspective, meaning anything below an 88.2 we would consider retracement dead, and we would consider then that this could then really fall towards the downside. At the same time, we need to be cognizant of the fact that if this is a bear trap, this is exactly what you would want to see from a price action perspective for a continuation towards the downside, is a push below that 88.2. And that 88.2 represents the 6-month low that indices have had, right? The first 6 months of this year was the worst performing 6 months that stock markets have had. I can't recall exactly, and don't quote me on this, but I believe in the last 20 years or so. So massive worst 6 months. We're at that low at this point in time. What I'm looking for is, I'm not looking for shorts on the stock market. I'm not looking for shorts on US30. I'm not buying the fact that if we go and have a look at past data, and for those of you who remember the show that I did where I've gone through all of the last couple recessions, what I'll do is I'll link that video up over here after the fact, and I'll send it into the groups. the last 5 or 6 recessions, every time interest rates have been increased, stock markets have performed extremely well. The times that stock markets have really not performed is when interest rates have been reduced. And again, this is counterintuitive, right? If interest is reduced, it makes acquiring money cheaper and easier, and it stimulates an economy, more sales, more growth. And you would assume that listed companies, listed entities would thrive off of this growth. But if you go and look at the data, look at the S&P 500 on its own, look at the last couple of recessions and the Federal Reserve raising interest rates, it has the opposite effect. Interest rate drops, stock markets feel the full effect of a recession, of a downturn, of a underwhelming, underperforming, as Powell put it last night, economy. Ultimately just means recession or correction. But ultimately, when interest rates are increased, stock markets do well. So looking at the last 20 years of data tells me that we should start to see some sort of bull activity, some sort of positivity within the markets. And that's why I'm not looking for short positions. The only way I would look for a short position or be convinced of a short position would be that if US30, if NASDAQ broke this 88.2, held out below the 88.2, and then obviously, came back for some sort of retest that we could see, would be tangible, giving us some sort of new structure we could potentially look at, right? So an event where we break out, retest, by all means, right? Then we are in, a completely different state of market, and we could see, stock markets lose a ton more value over the next quarter. But that is my sentiment and that is my bias. Looking at something on the FX side, like EURUSD, and we're seeing a very similar type of picture here, whereby, the dollar completely overwhelmed the euro. The euro can afford to purchase less and less dollars, but we are at an all-time low, meaning €1 buys you 98 cents US, right? And if we go and have a look at this in terms of the general scale of things, and I'm looking at a weekly time frame at this point, and you must understand there is a lot of data here, right? We have not been this low in terms of EURUSD in over 20 years, right? So across the board, we are sitting at massive support, and it doesn't matter where you look at which markets. And in most of these cases, the skeptic in me says that, if I was a big bank, if I was, international, big liquidity, how would I capitalize on this? How would I take out all of these traders that potentially are seeing the same thing? The guys that have spent time investing in past information, past data, how would I capitalize on that? Very, very simple, right? Bear trap and bull traps, because everything is sitting at that breaking point. We're sitting on that tipping scale of, complete market shifts and changes. Example, EURUSD, if that breaks the support, right, this 20-year low, this massive trend that you can see behind me, that's a whole new chapter for world currencies. Similar story with US30, similar story with gold. Now, looking at gold, we looked at that last night, and a couple of people were saying, hey, listen, and I supported a gold buy last night based on past data. Weakening dollar mean a rising price of gold. However, if we have a look at where gold is sitting, right, we're sitting at that recovery stage. And the reason why I tend to pay a lot of attention to gold is it acts as a safe haven, right? Gold being a commodity, there's a lot more demand supply type perspectives than just general currency, because remember, a country can just print $1 billion and inject it into the economy, right, backed by treasury bonds, whatever the case may be. Gold is a tangible physical asset, and yes, we're trading CFDs, contracts for difference, but it doesn't change the fact that gold is a tangible product. So I tend to often reflect on gold just to look at the sanity of the markets, right? And in this case, right, we see that in the opening minutes of the interest rate discussion, we saw gold pressing deep into support. And I explained I would not sell gold unless we break support. I would be looking for a buy bias. And for those of you who caught it, I said that we could potentially look for those buys at the $1,675 per ounce of gold. We've lost all the gains of yesterday, but we're still sitting at support. So gold being the only one essentially showing its hand saying, hey, listen, I'm at support. The dollar came out strong, yes, but investors are still holding gold as a safe haven currency. So there is going to be a lot of opportunities there for us. Now, being obviously the London Open, we want to obviously look at opportunities for a scalping perspective, and let's give it a quick look at what we're seeing on the RSI as per always. And we're currently looking at US30, and this is obviously a very small time frame. Okay, so let's get into it. Right. So as I showed you guys yesterday, that 500 period moving average, something that I look for quite often. You can apply this on your phone, and it's 500 period moving average on a 1 minute time frame. Just that's something you need to know. Now, what we're seeing in terms of that break at the 9 o'clock move is we're seeing where that break sits. And obviously I've been waffling on about interest rate decisions, which is obviously still quite important. But for those of you who caught it on the RSI, we are seeing that break that happened right there. Now we have popped off. However, we might be able to catch some sort of pullback, and how you can grab and manage that is just look at your RSI, and you'll start to find we're going to build some sort of bull structure specifically on a 1 minute time frame. We're going to make, a higher, and you want to just look for overbought conditions on this London Open, right? Because markets will try to correct, markets will get to some sort of point, and then we could see a retracement, a correction, and or some sort of pullback. And remember, we're floating and we're ranging now. There's the shock of the markets, and we're currently going to sit in a little bit of a range. So in a range, I generally don't like looking for long positions. When I say long positions, long-term positions, sorry, not bull or bearish positions. This is an opportunity to scalp the markets, and your best friend when scalping the markets is going to be RSI market structure, and then simply looking at building out market structure. Now we don't have perfect structure on US30. You're seeing that markets are kind of winding to the side here, right? A perfect market structure would be something like that. And this is indicative of a scallop formation, right? Scallop meaning meandering, to the side and losing momentum, ultimately giving us a precursor or pre-warning for a bull or a bear breakout, specifically in this case, a bear move. So we want to potentially start looking at scalping out the markets today, purely as the markets are going to try and digest all this data. We can follow the exact same thing. Going back to gold quickly, we will find the exact same thing we can potentially do on a 1 minute time frame. So a great little structure on gold is going to be, if we're going to see a recovery, right, we did see at 8 o'clock on the dot, 9 o'clock on the dot, we saw gold lose a little bit of momentum, and that could just be because of the shock factor of last night's interest rates. People waking up seeing this massive move to the downside and obviously just trying to jump on the bandwagon. However, if you're looking to scalp gold, what I would do is on a 1 minute time frame, draw out this market structure from 840 on your charts to where we are now, and simply look for that breakout or that pop. And you simply want to look at this low that we hit right there, right? And all we want to do is we want to both do two things. We want to break market structure, we want to break resistance, and we want to beat that low, and then we are good to go. Just looking at the comments really quickly, Darius says, been waiting for you to get in contact with 5 people yesterday so they can get in touch with. Darius, I don't know where you've been, but we did 4 shows yesterday. I had an 18-hour day in the markets, so please relax. You will be in contact. It's absolutely free. It's me doing you a favor, not the other way around. So please relax and hold on to your seats there. Heavenly Defended, my dear sister, checking from Germany. Keegan Vincent Koi Sun, I love that name. Into His Glory, Worship, Excellence. Joseph Nzila Nzola, Joffly and Gawain. Guys, absolutely welcome. If you're joining us a little bit late, a massive welcome. Chipo Nolo Zwane, welcome. Guys, beautiful. So we're going to have a ton of opportunities today. I'm going to be spending time in the markets, really looking at, how these structures play out. Again, I believe we are seeing a bear trap, right? A bear trap in terms of indices. I'm seeing a bull trap in terms of dollar strength. And I would like to catch this. I'd like to see it play out. Now, again, I'm not trying to predict the market. Our job is not to predict, rub a little ball and say, that's where it's going to be, but simply looking at the data. I don't buy that over the past 10 recessions, over the past 200 interest rate hikes, over the past 30, 40 press conferences, that now we're in a different state. than other times, right? We've seen times where we've been in full on world recessions. The US economy hasn't technically entered, technically they have, right? They've had 2 quarters of negative GDP growth. Technically, the White House changed that statement in terms of what a technical recession is, whatever, politics in general. What I'm trying to say is we've seen worse economic times and better results in past data, right? So as traders, all we're looking to do is looking to look at the data, and if the data is overwhelming, if the market structure is overwhelming, just simply look at price action. Price action is king, and that gives you, 100 reasons why there's never been a better time to be a Globex 360 trader. First reason being all of the live broadcasts, all the shows, all the content. Second reason being our new academy is launching very, very soon, and it's going to be absolutely mind-blowing. Third reason being that you have Guardian Angel plugged right into your system that essentially is like your personal system for trading. The more I trade, it blows me away with the type of information it tells me. It says, listen, this is your dominant currency. This is where you're trading the best. When you trade at these times, we're seeing you lose money. Why don't you try switching it up, right? Another reason after that is cash back, guys. Trading through last night, trading through this whole last week, whether a win, whether a loss, if I move my stop loss into entry and I get taken out, Globex 360 gives back to us as traders a rebate, real cash, real money that we can use to put back into our trading accounts or to withdraw straight to our bank accounts. Like, you don't need any more reasons outside of that. Now, looking at gold really quickly, because I can see it busy breaking out, is we can start to see that pop start to happen, right? And that is obviously what we want to take advantage of as we see that move busy happening to the top side. So for those of you who are going to jump into that, you're more than welcome to obviously get involved there, but this would be a little bit of a late entry. I would have liked to have caught it on the pop out, on the breakout, but that is where I would start to then look for, some of those long positions and essentially putting my stop loss below support. We will then start to see some sort of market structure on gold, but yes, I would really like to see some sort of gold recovery towards the top side, moving into the later trading sessions of the day. Again, just bearing in mind that we do need to recover above this resistance level that is directly in front of us. So we can see a little bit of a range, no issues, and that is why I'm putting my stop loss just below this market structure and just below support. So we'll allow this one to play out, we'll allow this one to range and do what it has to do. So you have a ton of reasons to be a part of the Globex 360 family. Guys, if you watch me right now, whether live or after the fact, and you're not in our Telegram group, go have a look at the link down below, jump into Telegram group. This is where I communicate directly. This is where, I say there's a live broadcast, we talk about the markets, and we're going to continue to evolve things and take things to the next level. Chippo from Zimbabwe, Lucky, good morning from Johannesburg. Welcome, welcome, welcome. Please come out Globex MT4 for Mac OS. Absolutely heavily defended. So what we are going to do, and it is available to you, if you log into your client area and you go to the download section on the left hand side of your screen, you will simply be able to choose what platform you would like to download for. So you will more than likely find that available directly within that environment, that you can obviously go in and take advantage for that. So just having a look here. Yes, so in essence, you can go in and have a look at that download option. If it's not there, please do let me know and I'll make sure the team gets that resolved and sorts it out for you. But I do know for iPhone, it's a simple one-click download, takes you to the iOS store and you're able to download it. So we will definitely work on that. For the tightening, yes. So Luluma, so just go and have a look at the past 20 interest rate hikes over the past 10 recessions. There will still be pressure, but remember, the third straight hike in the past, we've seen up to 5 hikes after a recessionary or economic slowdown. So in a lot of the cases, people will make statements and say, this is going to fall. Don't try to predict the market. Go look at the data and make informed decisions based on that. But hey, if you want to jump in and start shorting, go ahead, let me know how that goes and give us some feedback within the groups or in the next live shows. So there's going to be a lot happening. Again, please, big reminder, we have that interest rate due on the pound. We have an interest rate due on the South African rand. So if you're trading anything pound related, rand related, make sure you obviously are cognizant of the fact that there's going to be massive volatility. We will be looking at the rand's moves, we'll be looking at the pound's moves. This afternoon's New York Live Stock Exchange, I will start a little bit earlier and we will cover the rand's movements in that particular session together. So we'll start a little bit earlier. We'll start at about 5 minutes to 3. We'll let the New York Stock Exchange open and then we will run with that all the way to past open and see if we can capitalize, if the markets will wake up this morning and come to their senses and then move in the direction that we've seen past data predict. Okay, and other than that, guys, listen, thank you for the comments. Absolutely love being with you guys in these live sessions. I prefer the live sessions over the pre-recorded sessions, hands down, even though they can slightly be sometimes a little bit longer, but we had quite a bit to break down and discuss today. So outside of that, guys, as always, be safe, trade safe, and always remember to do things the Globex 360 way. Until I see you guys a little bit later, goodbye.